our last house price report, which covered the period from November to January, selling prices were up in Edinburgh and the surrounding areas by over 7% year on year. Sales volume was up significantly, reflecting the sort of busy market of the end of 2020, and homes were also selling a wee bit faster than last year. However, in the last couple of months since the start of 2021, there has been a year-on-year dip in the number of homes coming to market. This is, I guess, it's particularly been noticed because there were so many more homes coming to market year-on-year in the sort of second half of 2020. But there are a few potential factors that could account for this slowdown in listings. Last year we actually saw a really strong start to 2020 in terms of listings generally, so comparing the two, we were always potentially going to see a bit of a dip. Obviously we've also got the current guidance in place from the Scottish Government and the stay-at-home requirement, and also the impact of homeschooling. These things could be leading people who have been thinking about moving to just potentially delay their plans a little bit. However, we are seeing really strong numbers of property valuation requests through ESPC. People tend to request a valuation when they're thinking of selling, and we saw in January a 35% increase in property valuation requests through ESPC. So that indicates to us that there is significant demand to sell in the near future. And again, potentially people are thinking about it, but just waiting a little bit, biding their time. Following the announcement earlier in the week, with regards to the restrictions kind of slowly being eased over the next few months, and with the schools going back throughout March and the stay-at-home requirement lifted in April, we might start to see some more homes coming to market. That is great news for first-time buyers like yourselves, because the more homes, the more choice you have of properties. So that is obviously, if that does happen, that would be a good thing for you guys. Also, I guess I touched on this earlier, though, the First Home Fund is also due to come back in April. So for those of you that are wanting to apply to the scheme, that'll be really good news. Even if you're not, it's obviously worth bearing in mind that it's coming in then, as it just might mean that there's a greater influx of buyers to the market. So that can sometimes increase competition for homes a wee bit. So yeah, hopefully that sets the scene a little bit for you guys in terms of some of the key things happening in the market in recent months. What I'll do now is move on to the Q&A part of the event. So we'll start with the pre-submitted questions. And the first one is for Grant. So Grant, can you talk a little bit about how COVID-19 has impacted property prices?
Yeah, sure. Good morning, everyone. Property prices have been affected by the COVID crisis, but probably not as you would expect. I think that's very much a case of supply and demand being a major factor here. During the first lockdown, the market ground down to almost a halt because people weren't sure about what they could and couldn't do, and guidance was at best mixed and varied. So there was still a huge demand for people who wanted to buy houses and to move house, but there was less property coming to the market. As the restrictions from the first lockdown eased, the market picked up. People came to market, and we saw a mini property boom towards the end of last year, right up until December. We saw that, and with the advent of the second lockdown, the property market has slowed right down again in the last 2 months, and not much happened. There is still masses and masses of demand out there. There's still masses and masses of demand out there, which we can't fulfil, because the problem is that there's not enough property coming to market. Supply and demand comes in. We've now got a seller's market. There's not enough coming in. Prices are going up. You would have expected prices possibly to drop with a pandemic and not much going on, but the prices are definitely going up. So a cautionary tale for first-time buyers is the hard part's going to be possibly finding a property. And then once you do, you've really got to be careful that you're not getting dragged into a situation where you're paying an inflated price for a house that you wouldn't maybe have paid for that same property only a few months ago or a year or so ago. First-time buyers, it's a first-time buy. You're probably not a long-term buy. You might only be in that house for a few years. So you've got to be very, very careful that you're not paying too much. And should you want to sell again in the near future, you're not making that difficult for yourself. But the prices have been affected, and I would suggest that at the moment they've gone up the way.
Great, thank you, Grant. And I guess what you're saying there is obviously talking about first-time buyers not getting themselves into that situation of paying. That's where it's really important to get expert advice from a solicitor and also a mortgage advisor as well, to make sure you're you've got the expert advice there to keep you right throughout the process. So the next question is for David. So David, can you talk a bit about the process of getting a mortgage?
Yeah, sure, no problem. Hi, everyone. The initial sort of advice would be to sort of engage, obviously, with a mortgage advisor and have an initial chat, who'll be able to get a better understanding of what your personal and financial circumstances are, knowing what your income is, what type of employment, you know, are you employed, contracted, self-employed, etc. If you have any fixed debt commitments, such as loans, student loans, credit cards, children, childcare costs, and also, which is a very big obstacle for first-time buyers at the moment, and I sympathise, is the deposit size. Once we get all that information, a mortgage advisor can analyse that, and then they can come back to the client with solutions of what they can borrow, types of mortgages, payments, etc., to let them know what life is going to look like when they buy the house. And once you've got an agreed structure with the client, you would go to a chosen bank, because we are independent, so we can look at all different banks and get an agreement in principle. Once you've got that and a solicitor, that's you've got your ducks in a row to then be ready to go and offer on a chosen property. And once you get an offer accepted, you would then come back to your mortgage advisor, who would then ask for key information on the purchase, and for the first time ask you to prepare a shopping list of documents to evidence what you've already told us for the agreement in principle: passport, who you are, payslips, what you earn, bank statements showing your deposit and how you go about your business. We would then package the application to get fully approved. A fully packaged case can take 2 to 3 weeks, and that's the first time after that your mortgage is officially approved. Factoring in what Grant as a solicitor has to do then in the background, you're probably looking from a verbal acceptance to actually when you get the house keys, to ensure I'm not getting stressed and the client isn't getting stressed, probably about 6 to 8 weeks, because although the mortgage will be approved within 3 to 4, there's still a number of legal paperwork that has to be then done thereafter.
Great, thanks, David. And I know you mentioned the agreement in principle, which is obviously a key part of the process. Someone's asked, does this agreement in principle guarantee mortgage acceptance?
No, it doesn't. It's exactly what it says. It's an agreement in principle. It's based on information that the client has provided us with. However, it is the last thing the client can do before they can go and find a house. It gives them comfort that they've passed the credit score with a chosen lender, so they have passed that obstacle. But the true test is when they have an offer accepted and they've then got to evidence all those documents that I've mentioned, which will then be assessed by an underwriter who in essence is a human being, and that will be where the case is officially assessed. However, to give clients peace of mind, I can't recall an agreement in principle then not going to a full mortgage offer and being accepted if the client has been able to evidence what they have told us. The only bit that is unknown to a mortgage advisor is we are assessing the client, we are not assessing the property. So if the property is of a typical requirement above a pub, Chinese takeaway, laundrette, hairdresser, etc., that with some lenders can cause problems because of resaleability and fire hazard. But an agreement in principle is still a good indication of it's going to hopefully lead to a successful outcome.
Great, thanks, David. That's really useful. And the next question is for Grant. So, so it's similar to the one that David answered just a couple of questions ago, but what is the process of buying a house, and has this changed at all due to COVID-19? And I guess if you could focus more on the legal side, that would be great.
Yeah. Well, first of all, the process hasn't changed. Despite the COVID crisis, the process hasn't changed. what happens is that once you've found a property, and I think that's probably one of the hardest parts at the moment, but once you've found a property, get in touch with your solicitor who'll be able to chat through with you that particular property, the area it's in, what houses in that area are going for price-wise, etc. And then you can come to a sort of landing on what you'd like to offer to start off with. Okay, the solicitor will then put in an offer, and there'll be possibly a wee bit of come and go between your solicitor and the seller's agents, whether it's an estate agent or a solicitor, on the price. And then hopefully you'll get a price agreed and achieved and work towards an entry date there. At that stage, you know you're going to get that particular property, and I would recommend that you then get in touch with your financial advisor at that stage so that they can start the mortgage process. As David says, it can take a few weeks to do that, and the conveyancing takes a few weeks as well. So if these two things can be working along at the same time, it's going to make it a lot quicker and a lot easier. So you've got that happening, the offers to be accepted, the solicitor then starts the conveyancing process of checking the title deeds and reporting back to you with plans and anything else that there might be which is specialised about that particular property. An offer of mortgage should hopefully come through during this stage, and the solicitor will also prepare the mortgage paperwork which the buyer needs to sign, and they'll also speak to the clients and tell them what's all going on all the way through this and explain the mortgage process and what needs to be done there. And once the mortgage paperwork comes through, and if the title deeds are all in order, they'll also have a discussion with you about what we call concluding the bargain, or tying things up, which is when you're finally committed to buying that property. Okay, and at that stage, an entry date will be determined. The solicitor will discuss with you the money side of things, what's coming in from your lender, what deposit you need to pay, and achieving all the money coming in from the various places prior to the date of entry, transferring these funds over to the seller's lawyers, and then getting you your keys on the correct date of entry. That's it, really simplistic. There's no doubt going to be a lot of hurdles between here and then at the same time, but it's important that the lawyers and the financial advisors are working together along at the same time, but most importantly, keeping the client up to date as to what's going on all the way through that process. And if you speak to your solicitor, they will keep you up to speed on where they're at with things.
Great, thank you, Grant. It's really useful to hear, like, sort of from both of you, the in-depth sort of process of mortgages and the sort of legal side. And it does serve to emphasise that it's really important to get someone to help you navigate that, especially if it's your first time going through those processes, as there's quite a lot to think about as you go through. So the next question is for David, and so this is one that I think has been asked quite a lot over the last year. Is it possible to get a 90 or 95% mortgage at the moment?
So 95% on a normal scheme without any help of any government schemes, sadly, has not been available since we've had COVID. The good news is that the 10% is now more readily available. For the second part of last year, it was actually 15%, and with the odd lender popping in and out with a 10%, but they were getting saturated with volume and business. But what I'm pleased to say is at the turn of the year, over Christmas, there is now more lenders readily available with a 10%, which is allowing it to be sustained and available. What I will say is it is the minimum for a normal purchase, so with that becomes the strictest credit score that you need to pass, and probably the strictest criteria. Some lenders also request it's a house and not a flat, but being independent mortgage advisors that we are at ESPC, we have access to lenders that will be also okay with a flat. I think one really important thing that first-time buyers need to understand, and is an obstacle, is that the 90% borrowing, the 10% deposit will be based on purchase price or valuation, whichever is the lower figure. So to give you a very quick example, if you have a house that is valued at £100,000, but because of the competition for that house, you have to bid £110,000 to get that house, the bank will only lend you £90,000 against the valuation of 100. So although you've got the 10,000, you would also need the 10,000 to bid over. So you just need to factor that into your costs. You need to factor that into your calculations. But The good news is there is more readily available. Sadly, I don't, and this is a personal opinion, I don't believe we're going to see 5% deposit until we get much closer to normality, which I think we're all looking forward to.
Yeah, definitely. Thanks, David. That's really useful and definitely a really good point. I think a lot of first-time buyers aren't necessarily aware about the loan to value, so it was really good to clarify. Another question relating to deposits, but specifically for new builds, someone's asked if it's possible to get a greater than 80% loan to value mortgage on a new build.
Yes, there's lenders readily available at 80%. 80% is a good commitment from the client, and also with a new build, you don't need to worry about paying over the valuation. I'd go as far as to say you may even readily available with a deposit of 15% for a new build. Beyond that, it becomes much harder because lenders use the analogy like buying a brand new car, that when it leaves the showroom, it depreciates in value, and that's what they see rightly or wrongly with a house. And in return, they do want that little bit extra deposit, which I would say more is around the 15 to 20% mark.
Great, that's really useful. Thank you, David. And the next question, it touches on what David was saying about the loan to value and bidding over the home report valuation. Someone has asked if they should always expect to pay more than the property valuation. So Grant, can you offer some insight into that?
I don't think you should always expect to have to pay more. Nobody likes to pay more than they absolutely have to. So I would hate to start off in that pretext that you're going to have to pay more. It's like anything else in life. If the demand is high, then the chances are you might have to pay a bit more. There are property hotspots in places. There are certain areas or certain houses which will attract a higher amount of interest from people, and if there's competition, that pushes the price up. So, for example, places with a sea view, or parts of St Andrews, parts of Edinburgh, where prices are normally higher, then you probably are going to have to pay slightly more than, or a bit more than, the asking price, depending on the circumstances. Both the surveyors and what you see in the home reports, though, are all very accurate and give you an estimate of what a property is worth. But the majority of properties, I would say at the moment, are going for about the asking price, maybe slightly more, given the lack of property hitting the market at the moment. On the other side of that, though, there are properties and areas where houses aren't achieving full market value, and either in terms of area or the actual property or the circumstances of the seller. You do get occasions where somebody might have passed away in a house, and the family just want to move the house on and get on with life, or their circumstances are such that they're really keen to sell to buy another house. So there are other situations where people will expect or accept less than asking price for a property. So, I mean, it's not all doom and gloom. Don't think just because a house is a certain price, you're going to have to pay an extra 10% over and above that. It's far from that situation at the moment. So, again, chat to your financial advisor, chat to your solicitor. They've got an idea about the local market and what prices are achieving round about that area. So, by all means, give them a call and we'll help you out with that.
Great, thank you, Grant. It's really good points there. I think we sometimes do get asked questions, the magic number to bid over a valuation and things, which just isn't the case. As you say, it's a very case-by-case basis and really important. Again, I think I've said this a few times, but to really get expert advice, and solicitors are doing this day in and day out, so it's always good to speak to someone who's used to navigating the market and putting in offers and see what they would advise you. So David, one for you, quite a big one, this one. So can you provide an overview of the schemes available to help first-time buyers? So for example, the First Home Fund, Help to Buy ISAs, and the Golden Share Scheme.
My favourite question. So it's quite confusing. I'll try to clarify as much as I can, because some of them sort of overrun with each other. But I think that the first thing I would say is the best thing is just to speak to an independent mortgage advisor in the first outset, and that can maybe guide you on the right path. But in terms of an overview, so the First Home Fund is obviously the hot topic at the moment, and there is huge demand in audience, and we're receiving regular inquiries. It starts on the 1st of April. The simplicity of it is the client must have at least a 5% deposit. First Home Fund will offer, if you are eligible, up to £25,000 on top of your deposit, which can then hopefully mean you have a 10 or 15% deposit, but also help you with the offers over scenario. In return, you must have an offer accepted before you can apply. It's £550 to apply. You get that money back if you're not eligible, but it's payable once you are eligible. And basically, it's because it's not open until the 1st of April. The difficult part of it is when you can start the process. Now, ESPC mortgages have taken the view, rightly or wrongly, that we can't really look at it at the moment because the scheme is still over a month away, although I'm sure there is some brokers that are. And the reason we're doing that is because you don't know you're going to get a mortgage until you are eligible for the First Home Fund. We expect a huge backlog of applications, which may take up to a month. And then you've got all the other parts of your mortgage to be approved conveyancing. So you're probably looking at a moving date of no earlier than June. So it's still some time away. Don't want to put anybody off, because if you don't try, you don't get. But it is potentially going to be like trying to win the lottery, also getting this eligibility, such as the audience. But it is a great initiative by the government, and it is helping first-time buyers. Just sadly, there doesn't seem to be as much money this time, which makes it harder to be eligible. In terms of other schemes, so you've got the lift scheme, which is designed for lower income people and has been popular as well. Again, you must have a 5% deposit, but what the scheme can offer is up to 40% assistance as well. And what that would allow you to do if you're on lower incomes is buy a bigger and better property, but obviously you will only retain, like the First Home Fund, you won't retain 100% ownership of the property. They will retain a percentage, and on sale of the house and profit, they would get that money percentage back. There is a ceiling point on the prices you can pay for 1 and 2 bed properties with a lift scheme. And I think the key challenge is you cannot bid over the valuation. So you've got to get a bit lucky with the property. You've got to have no competition, and you basically hope about being at the right place at the right time, I suppose. The Help to Buy scheme, which was popular with new builds, it's now closed, but the Help to Buy ISA, which was hand in hand with that, can still be used for purchasing, and there is still bonuses available. But the bonus part of the Help to Buy ISA, the 25%, that is not available until the solicitor on purchase can evidence that you've bought the house. So you don't actually get the money until you've bought the house. So although you will get it from a cash flow point of view, it will not be part of your deposit and liquidated to allow you to actually buy the property, which is a crucial thing to factor in. Finally, golden shares. So this is not as common a thing, and we see very regularly, and it really mainly comes with more to do with the particulars of the sale of the property and if it is available with the property. But what that does is it allows you again to buy a bigger and better house where you're only buying it at about 80% of the market share. So you're getting more house for your money, and it's typically done through the Edinburgh Council. But in return, the challenge with that one is that the lenders that we have access to, we're finding that they would like you not to have a 5 or 10% deposit, but up to a 15% deposit on the 80% of your share. So I hope I'm making sense. It's very complicated. I struggle to keep a hold of it, but I think it's better just to talk it through with an advisor. He can guide you and probably try and make it as simple as possible.
Great, thank you, David. Yeah, that's it's great to hear you talk through them all. As you say, there's lots of different options and there's lots of things to be aware of. And I totally agree with you that speaking it through with an advisor can help you work out what the right option for you is if you do want to use one of these schemes. So yeah, the next question is for Grant. Obviously, virtual viewings have become a key part of the house hunting process now, and someone is asking, can you buy a property from a virtual viewing if you are unable to do an in-person viewing?
The short answer to that is yes, you can buy a property in a virtual viewing. You can buy a property without viewing it at all. I have to say that though it's very, very unusual. In the days before there was virtual viewings, anytime somebody wanted to buy a property without looking at it, it certainly raised a few eyebrows and almost you became suspicious of the whole thing. I mean, it's such one of the biggest investments that you'll make. So to buy something without looking at it would be, you know, extremely unusual. And I mean, if you were a seller, you would be pretty wary about that as well, whether they were going to pull out right up to the last minute. The onset of virtual viewings ticks so many boxes because it does away with what we would call the nosy neighbour bit, where the neighbours want to have a look at the house so they can just go online and have a look at that. It also does away with time wasters. So people will have a look at it and decide that property might or might not be for them. And if it's not for them, they won't waste your time in getting the house ready and coming to have a look at it. And the other big advantage on virtual viewing is it's safer. I mean, in this day and age, we don't want people going to other people's houses unless they absolutely have to. So you'll cut right down on the number of viewers and cut right down on the risk, which I think is important in this pandemic time. So the onset of virtual viewings has been very helpful for a lot of ways. Can you buy off the back of it? Yes, you can. It's still unusual, but people are doing it. So again, something else that can't be ruled out.
Great, thank you, Grant. Yeah, as you say, I mean, there's a lot of really great things that have come from the virtual viewings in terms of allowing people to have a look and then work out if they actually are serious about the property and things like that, and for safety. But yeah, really good to hear. As you say, it's an unusual thing to happen still, that people would buy something just from the virtual viewing. So the final question is for Grant again, and it's relating to the LTT holiday. So someone is asking, do you think that the LTT holiday will end as planned in March? And what impact do you think this will have on the market?
Okay, well, LTT, I think you touched on earlier, it's what we used to call stamp duty, which is a tax which is payable on the purchase price on a property. Normally it kicks in Scotland at 2% over 145,000. So the first 145 is free, and then you're 2% above that up to the next bracket. For first-time buyers, that bracket kicks in at 175,000. So it's 2% over 175,000 up to 250,000. We currently have an LTT holiday, which takes away that bottom bracket. So you're only paying LTT on properties over 250,000. That holiday is due to finish at the end of March. Now, there's a whole lot of talk in the media already about how south of the border, the holiday is going to be extended further. That's causing a lot of confusion on two grounds. One, because they haven't extended the holiday in England yet, and secondly, because it only applies to England. So far, the Scottish Government have not announced any extension to the holiday or any changes to the plans at all. Some might argue that there are only two certainties in life. One is death and one is taxes. And the government aren't shy in taxing home buyers wherever they can. However, these taxes are more aimed at people who are buying second homes and all the rest of it to try and encourage first-time buyers. So I would like to hope that the government can do something to help first-time buyers, because it's the knock-on effect on the market. If first-time buyers are out there and they're active and they're buying, it can ripple right the way up the chain, and it's great for the economy that these things can happen. So there's nothing been announced yet, but as it stands at the moment, first-time buyers are going to be paying a wee bit more on LTT from the 31st, from the 1st of April, in fact. So, you know, fingers crossed that the government will help the first-time buyers out with that. But yet, that one remains to be seen. And I'm not going to offer an opinion what I think the government will do.
Thanks, Grant. Yeah, tricky one. I think we've been asked at a few of the last events, but yeah, as you say, just need to wait and see what they announce. If anyone is interested to keep tabs, we do try and, when these announcements do come out, we do try and update our the ESPC website and share it via our social media, so our Facebook page, and also in our newsletter. So if you are signed up to that, hopefully you would get a wee notice if it was at any point an extension was announced, and we'll also put in a reminder if it does then come to an end as well. Great, so that's the end of the pre-submitted questions. So we'll just move on to the some of the questions that have been submitted during the event so far. So the first one here. So I think the answer for this would, well, I'll just pass it to David actually. So someone's asked, can you put in an offer with only a mortgage agreement in principle in place?
Yes, is the answer to that. That's all you can do, is have an agreement in principle. A full mortgage application can't be started until you've got a property to attach that application to. So the agreement in principle is as far as you can take it. I think probably one thing I missed out on the agreement in principle previously is an agreement in principle, depending on the lender, has an expiry period of between 30 to 90 days, depending on the chosen bank. But if that expires, it's not a gun to your head to say you must buy a house. It's basically, it can be refreshed, or, you know, or equally, if it doesn't get refreshed immediately, provided your circumstances and financial conduct remain consistent, it is still a good indication that you will be eligible. But that is as far as you can take it until you have an offer accepted.
Great, thank you, David. And the next one is for Grant. So someone's asking, how long before you start to think about buying a house should you contact a solicitor?
The solicitor will speak to you about buying a house at any stage. You know, what we're keen to do is to speak to people and just to make introductions, give general advice about the property market, how things are standing at the moment, and what the pitfalls are to look out for and during that process. So you can go and speak to your solicitor at any stage. Doesn't do any harm at all to make that acquaintance and just to talk through what's going on and where you are, just general tips and advice for what to look out for along the way.
Great, thank you, Grant. And the next one is for you as well. Someone's asking about conditional versus unconditional offers. Just asking if you could talk a little bit about those.
All offers have conditions attached to them. I mean, a standard offer runs to 3 or 4 pages of conditions and all the rest of it. The more common conditions that people will refer to are something we touched on earlier. It will be subject to a mortgage, people getting a loan. As David says, no, unless you're paying cash for the house, your offer is almost certainly going to be subject to you getting a mortgage in place. The other conditions that you might put in are things like subject to the home report if you've not seen the home report yet. Some people, going back on what we said, might, if there's a house that they're very, very keen on, they might put in an offer before they've even seen the thing, so it's subject to viewing. I mean, if I was a seller, that offer is not worth the paper it's printed on, basically. So you know, the main two that you're looking at is whether it's subject to survey and subject to the finance. At a closing date, you want it to be as clean as it can be, so that there's no strings attached. So the sellers will ask, do you have an agreement in principle? Do you have something else to sell? But if you're a first-time buyer, which is what we're focusing on today, and you've got an agreement in principle and you've nothing to sell, you are in a very strong position when you're looking at houses. You're the sort of person that buyers are looking for. There's no chain at the back of you, and hopefully no strings attached.
Great, thank you, Grant. That's really useful. And I think the next question is one we get asked quite often in these events, is whether we think house prices will drop in the coming months, which is always a tricky question. Just coming from it from an ESPC data perspective, we've actually seen house prices in our last few house price reports, which are available on espc.com, we've actually seen a significant year-on-year increase in house prices generally. And Grant touched on that earlier about supply versus demand and house prices actually going up recently. It's obviously very difficult to predict what the future will bring for the market, but so far we've seen the market in Edinburgh and the surrounding areas, in Fife and the Lothians and the borders, be pretty stable in terms of house prices, and in fact those house prices going up. So I think we're, you know, relatively confident in it staying sort of pretty stable going forward, I would say. I don't know if Grant or David, you would want to chime in with any thoughts on that as well.
Well, I think when the lockdown restrictions ease, I think we'll see another boom. I think we'll see another mini boom. There's no doubt about that. What happens after that remains to be seen once we get into this new normal that everybody talks about, whether you know, whether it'll come back a bit, I think not. I think we'll get a mini boom, and I think things will level off again, and we'll go back to the sort of steady growth. But I think we're in for another wee surge, and then some steadying of the ship, shall we say? I don't know what you think about that one, David.
No, I would agree. I would think that there's still lots of people wanting to buy houses, and I think the only thing that's sort of slowing it down at the moment is the lack of supply, which is why the prices are going up, because buyers are getting congregated and bidding on the same properties. Once we get more properties up for sale, they'll get spread out more, the buyers, but because they're ready and they're well placed, the properties will come and go pretty quickly, which is not great for a first-time buyer's point of view initially, but I think through time, as we get past more into normality, there then has to be a levelling off, because we kind of continue sort of this spike for a long period.
Great, thanks David and Grant, that's really useful. Okay, so the next one is, so the first part of the question is, how long before I want to move into a property can I start looking or beginning to make an offer? And also, I think David, you did touch on this earlier, but just to confirm, how long will the mortgage in principle last? So David, do you want to take that one?
So the mortgage in principle, depending on the lender, will last 30 to 90 days, but unofficially, as I said earlier, it can last longer if your circumstances remain consistent. In terms of when can you go start looking for houses, you can go looking for houses whenever you want, but I would say, if I'm wanting to give you a very good service and you're wanting to go into this with your eyes wide open, we would ideally like to engage with you probably a month before you're seriously browsing, so we can assess your circumstances, give you an overview of your options, let you know what your budget is, and that you then can transfer that in your mind when you're seeing the properties of what life is going to look like for you. So that's an ideal world. It doesn't always work like that, shall we say, but that's the ideal order of events, and I think it then makes you more clearer and confident about when you're making that offer and getting that good news, that you're happy and you know what lies ahead clearly.
Great, thanks David, that's really useful. So yeah, I think we'll just make this the last question, and it's another one for David. So it's just someone looking to buy a house as a couple. One of them is a homeowner and the other isn't. They have enough for a 10% deposit for a new build, but they're wondering if they should use the first home fund when it becomes available to get a 15% deposit to make them more eligible, I guess, for mortgages.
The short answer, I mean, it's hard to be particular about some of these circumstances, but as I mentioned earlier, 10% deposits on new builds. If it's a flat, I can't even think of one lender. If it's a house, I can only think of one lender. So that tells you how restricted it is. So the first home fund with that option is valuable, and basically can allow them to get to 15%, which will then hopefully give them a bigger array of options. So yes is the answer to that question. However, as we touched on earlier, it's then the sort of lottery situation of managing to get the funds for the first home fund as well. But in an ideal world, they certainly would with a new build try to aspire towards a 15% deposit to give them more options and more chance of being eligible.
Great, thanks David, that's really useful, really good advice. And yeah, I think that's pretty much all the time we have for. Sorry to those whose questions we didn't quite get to, but thank you very much for coming to this event, and yeah, thank you very much for joining us. We've obviously touched on a few different things today, like our house price reports and our, like, there's a lot of useful info on ESPC.com if you are interested to find some more information about any of the things that we have talked about